Good morning from Paul. I'm recording this at 6:30 on Thursday morning, which is the 15th of May, 2025. I've been talking about doing an article or video about laggards in this powerful rally we've had in the last 6 weeks. Not words that I expected to be speaking, but there we are. It's been lovely, isn't it? Hope you're making loads of money. How do we handle this? Do we look at the shares that have gone up the most and buy those? Or should we be taking profits from the stuff that's gone up the most? Should we be looking at the laggards? That's the bit I like to do. Because in previous early stage bull markets, which, hang on, let me just move that. There we are, that's better. In previous early stage bull markets, I've absolutely cleaned up. I'm thinking here 2003, my best ever investing year. Also 2009. You'll notice these are all sort of just in the first year after a 2-3 year bear market. To 2016, 2017, I really got back on my feet after all the mess I made of things in 2008. And I had to, it's very difficult to get back on your feet after you lose all your money through gearing, which is what I did in 2008. I went from a millionaire to a negative millionaire, and it took me 8 years to pay off all the debts, reach settlements with negotiated settlements with 19 creditors. It was an absolute bloody nightmare. So that is the danger. I've lived the danger of excessive gearing. Well, it wasn't just the gearing. It was I combined excessive gearing with illiquidity. When the financial crisis hit in 2008, I had a portfolio of about £4 million, which I'd made in 7 years from nothing. But I'd geared it up about three times, and I had gross market positions of about 11 or 12 million quid, supported by 3.5 million equity. Well, then the great financial crisis happened, and it happened over about a year or 18 months. It was zigzags. It was zigzag moves down, starting off with Bear Stearns collapsing, and then peaking when Lehman's went bust, and governments finally pulled their finger out and just gave guarantees to all the major financial institutions, poured liquidity into the system, and we pulled through. But anyway, why am I mentioning that? Oh yes, I don't know really, but it's just, well, because to warn people of the dangers of combining gearing and illiquidity. I couldn't get out of the positions I was in 2008 because they were all I had about 11, 12 million of gross market positions supported by 3.5 million equity. By about summer of 2008, the equity was all gone. By the autumn of 2008, the equity was minus 2 million. And it took a long time for the spread betting companies to unwind my positions because there was no bids in a really severe bear market, which this lately has not been. Actually, this has just been a correction, really. There's always been liquidity in the market, but in 2008, the liquidity disappeared. There was literally no bids for a lot of the small caps I was in. So it was a slow motion car crash as my life collapsed over about a year. All along that time, you're hoping for a recovery, and there were sorts of partial recoveries. So anyway, I like to share my experiences, my terrible experiences in the past of what I got wrong, in the hope it will warn people away from combining illiquid shares, speculative shares with gearing. Just don't do it. If you're going to use gearing, keep it moderate and spread it over lots of stocks. Choose the stocks carefully and not speculative stocks. And keep that gearing level down, or don't use gearing at all. That's the best option, but you can manage it if you're careful. Also, I switch off online dealing, so I can only phone my orders in to a dedicated dealer who looks after me at SpreadX, and he works the prices for me, gets good price improvements, just like a normal broker. And that way I've sort of tamed it. Even so, I've had a really, really volatile ride over the last few weeks. I've been heavily geared up during this last downturn. And I actually, again, I've only got a small account now. That's the other thing. Spread betting accounts, just keep them small. Don't get involved in trading indices, Forex, or anything else like that. Just stick to your knitting, what you're good at, which with me is the small and mid caps. Anyway, my geared account survived the recent market plunge, although I did actually at the low point have, on paper anyway, have lost more than half the equity in the account. But it's now right back to where I've recouped all of that in the last few weeks. So I'm now looking for things to top slice. I'm looking at I've top sliced JD Wetherspoon, as I mentioned. Why? Well, just have a look at the thing here on ShareScope. There's JD Wetherspoon. Look at the extent of that. That's a 5-year chart. Let's narrow that down to say 1 year. I mean, look at the size of the. I like the 1-day candlesticks. It's because it's quite narrow. The candlesticks are not showing. If I put it down to 6 months, there we are. I don't know why. I just think they look better because then it shows you the opening and closing with a candlestick. If it's black, it went down for the day, and the top line is this open price. The bottom line is the closing price, and then the two little sticks either side of that. There you are. That's the low point of the day, 592 on 18th of March, for example. So I love candlestick charts because each line gives you 4 bits of information: opening, closing price, day's high and day's low. So they're far better than line charts. Anyway, that's Wetherspoons over the last 6 months. I was bullish on it all the way through here because it was cheap. Then it got even cheaper in this crisis. So, of course, I held them. And then it soared to here, at which point I think it's fairly valued. There you are, 14.9 times PE for Wetherspoon, 1.7 yield, reasonable asset backing. At that level, and given that the outlook comments of the company just say the same thing every time, a reasonable outcome, air quotes there, for the year, doesn't really tell us very much. So I think, yeah, probably fairly valued for now. So that's just an example of something where I banked my profits. Recycle the money into something that hasn't moved. So the main purpose of this video, as always, I ramble off the point, but the main purpose of this video is to talk about laggards. So what I've done, let's move me over there. What I've done, I've set up a really simple, so let's start by looking at the whole market. So LSE shares, that shows 1,850 items. I'm just wiggling the cursor there. Now, I use a standard filter that I set up called, these are the filters I've set up here, cut out nano caps. Oh, I'm in the way. So exclude 25 million and lower market caps, also exclude some sectors I don't look at. Now, I've actually tweaked it. Here we are, and the filters appear at the top here, cut out nano caps. Can you see that? Press the arrow down and it shows you the criteria. You can change these. So I've set it to a minimum market cap of 10 million and it shows you there, the shaded bit, all the companies that it misses off out of the total. So you can see that cuts a large chunk of the market out. And then I've taken the tick off there. I've got a filter with price to net tangible asset value, which I'm not using because it's not ticked. That one there just excludes 3 or 4 Japanese and French companies that come into the list that I don't want. But the main, and then here we are, sector excludes tobacco, industrial metals and mining, precious metals and mining, oil and gas and coal. I personally don't cover those sectors because they're too specialized. And I don't want to assess things badly where I don't have any understanding or edge. So that's my cutout nano caps filter, and you can change that. I can just change it to 15 million market cap if I want. Anyway, let's leave it at 10. And then you can press disable there. But anyway, that is the filtering is brilliant on ShareScope. Once everything's customizable. So there we are. That is the filter, which has brought it down from 80. So let's disable the filter. 1,850 items, and then apply the filter. There you are, 1,080. So that's got rid of 800 odd shares to make it a more manageable list. Now, what am I going to screen? I'll just show you the columns here, which are all customizable. You can widen and shorten it here. So my key 3 value metrics, just my starting point, is forecast PE, forecast yield, and price to net tangible asset value. Just my basic starting points. What's the red blob? That is to widen or narrow the column. I'm constantly tweaking the columns to fit it in. I can zoom in or out just using the control minus or control plus. Oops, I don't really want those messages coming up, sorry. Bloody WhatsApp. We'll probably get a few more of those. Sorry about that. Anyway, yeah, control plus, control, you're making it bigger, control minus, making it smaller. I need to keep it reasonably legible for you, so it'll come up on the video. So let's leave it at that size. You can always freeze frame if you want to on the video. Now, how am I looking for best performers and laggards? Well, what I did first, let's go to the list, other lists, major indices. I want to look at, there we are, major indices. I want to look at what level did the market bottom at. Disable my filter because that stops them coming up. Here we are. Let's go up there. What level did the market bottom at? Well, I'm only really interested. Now, I did this before, so I know already it was the 9th of April. But how did I find that? Well, I clicked on the main indices. Oh, damn thing's in the wrong place. Here we are. I'll put up a 3-month chart. This is FTSE 100. Now, candlestick. Here you can see the big Trump tariff sell-off that started on the 3rd of April. Bang, bang. Basically, it was 3 days of carnage from 8,600. This is FTSE 100, remember there? From 8,600 on the 3rd of April, 4th of April, 5th of April. So we had 3 massive down days, taking us from 8,600 to 7,700. Now look what happened. We had a rebound on the 8th of April, then another retest of that low on the 9th of April, then a rebound on the 10th of April. Then the recovery began. So as you can see, very quickly, the low point was, the closing price low point was about 7,700 on 7th of April and 7,684 on the 9th of April. Now, there were intraday spikes. See those little spikes down, lower on those 2 days. But I'm going to go by the end of day closing price, which the low point was the 9th of April. Now, let's look at AIM because I'm small caps focused, although we're focusing on everything at the moment. We're covering all the shares. AIM all share. Look at that. 7th of April, 9th of April. Exactly the same bottoming pattern. And a very powerful recovery ever since. But we're only back to where we were in 18th of February. So I wouldn't say this is a bull market. I would say this is a powerful rally. But interestingly enough, we're now over I think that's the 200-day moving average. Yes, it is there. We've now punched through the 200-day moving average. If you follow things like that, you'll see that we also punched through the 200-day moving average in April 24, but then it dropped back below it by September 24. So a nice summer rally there that then fizzled out. And we got another really big leg down. But look at that. If you were out of the market over that crucial month, you've missed a huge rally. This is why I always stay fully invested when the fundamentals in the companies I'm in are good. So anyway, we've now established what the low point was. It was the 9th of April. So I now want to sort on prices from that. So let's get me over here. Right. I've got lots of columns here, haven't I? We need to, what's happening? Oh, there we are. These are all I've got lots of columns here on a momentum. If you look at the bottom, setting momentum, that wasn't the one I wanted, actually. I wanted equities, financial health, I think it was. Equities overview. And all these are customizable. That's the one. So where you see design, see that button at the bottom left? Always look for the design button because that's where you can customize everything on ShareScope. And you do have to put in the time and effort to learn how to use ShareScope. It's very effective, complicated software. You can only find out so much by playing around with it. So that's why looking at the user videos is really important. I still haven't done that. And the one-to-one Zoom training calls are free once you subscribe. They're brilliant. I've had 2 already. So do take those up. You learn new features every time. Make a list. I've made a list of all the things I wanted to query, and then I go through them in a tutorial session with another Paul at ShareScope, who's great, and he's helped me learn how to use the basics. I'm still only a basic user of ShareScope. Right, so we're on the indices thing at the moment, so let's change that to I normally go by actually other lists. That's your key one. I like this one, LSE shares excluding investment trusts. And you can make that a default thing. Oh God, how do you do that? Let me think. There is a way of making it a default thing up there. Oh, stop putting messages up. Sorry, that might be breaching confidentiality. So I'm really sorry to anyone whose name came up there. Please ignore those. Other lists, you can click on that, and that's it. And you can put it up here. There we are. So that's now my default button. Right, brilliant. For LSE shares, excluding investment trusts. Now we want to 1,462 items. Apply manage for cut out nanocaps. Right, we'll get that back in. Right, okay, this is now my thing. Now what I've done here, this is the key thing. I set up a column for price change, edit column, there we are, I right click there. Price change since date. You can put the last 5 trading days, which I normally have it. So that shows me the last 5 trading days. Big percentage movers, you see. You'll recognize a lot of those names from our reports. Double click to change it to risers. H&T. I wish I had some of those. I was so keen on it and I didn't buy any. Canova was another takeover bid. H&T was a takeover bid, and so on. So this is a really good way, setting up that 5-day thing. But what you can do, edit column, is change it to price change since, and then any date you like. So we've already established that the 9th of April was the low point. So let's put that in. Right, okay, so we've now got a list of the biggest gainers. So you can see here, that's a bit of an anomaly, but these are the stocks these little ones here are all kind of a bit funny, not proper thing. I might actually I think I'm going to increase the minimum market cap because it's bringing up quite a bit of micro cap junk. Let's put it to 25 million. Apply. That's better. That's a bit of a funny one, InSig AI. Let's hide this. H&T is up 74% from the low because we had a takeover bid on that one. That's great. I'll put that there so that covers the WhatsApp messages. Cirata's a load of junk, but it's had a speculative increase there. Let me widen that to there so you can see the chart. You see I'm clicking on them and the chart comes up here. There we are. That's the big move up you've seen in Cirata. Absolute junk. That's WANdisco. Severfield's had a nice bounce, but look, people are banking their profits from 20p to 35. Lovely trade, but it's people banking profits there. CT Automotive was one of mine. I'm in that one. That's drifting. I think that might drift down more because there's a big shareholder selling shares in that. Big Technologies, another one of ours, has had a fabulous rise on a new CEO. I sold about a few days before. Oh, such a ninny. Never mind, can't win them all. At least we got the investing idea right. That's the main thing. Seeing Machines is one of mine. That's something I bought when it started to break out here. So I'm still holding that one. That was a nice little trade. Burberry, ridiculous share, lousy results yesterday, crazy valuation. But anyway, what do I know? ITM Powers had a nice bounce on contract news. Big cash pile there. We've covered that one. We've covered nearly all of these. FD Technologies has risen 51%. So this filter is showing you, remember, I've sorted here on the biggest percentage change since the market low. So these are the winners, and a lot of them are quite kind of speculative rebounds. ProCook put out a good, relatively good update. So that's bounced a lot. Canova had a takeover bid. So we've covered all of these. SIG, I think that's crap. But it's a relief rally on quite a few building products companies. So quite a few of them are seeing nice bounces. So I nearly run out of time. Ceres Power, these are all the active ops. I was looking at that yesterday. Deliveroo had a bid. Rank is interesting. We covered that in yesterday's report. Synthoma, I'm not keen on the balance sheet, but I can see there might be something in Traxis. We've been all over that one. Made a bit of money from my friends ISA on that one. So we've covered Origo. That was a very, I think, spurious speculative bounce there. And look, people are selling into it now. That's Premier Miton. We've been green on as well. We like that. That's bounced a lot. Doc Digital, I had a look at that last night. I think that's probably fully priced now. for a fairly mature business. Halfords has done really well, but again, fully priced now, I would say. Jet2 is one of ours. We're green on that one. So loads of these are things we've been flagging and are green on. Filtronic we like. We've been green or amber green on that. So these are all your big movers that I think in most cases are probably priced up with events now. So personally, I would be looking at maybe top slicing some of these and recycling the money into the laggards, which is the main purpose of this. How do I find the laggards? Just double click on this. This is showing the biggest fallers since the market low. Now, obviously, if they've fallen considerably since the market low, something's gone badly wrong. So Mobico, yeah, that I don't know how to value. It's the market. We covered it anyway in the reports. Playtech paid a huge special divvy. Cyancanode, just an absolute pile of crap, a constant disappointer. RWS, big market overreaction to its fall again. I bought near the lows here, so that's been a lovely trade. Treat again, overreaction on a profit warning. So I bought around here, top sliced around here. So that's been another nice trade. I'm still holding some though. It's going down a bit. The results were fine. I thought the H1 results, they weren't fine. Profit halved, but the outlook kind of solidified. And I think people have overreacted. I think there's more upside on Treat. But see our report for that. System 1 we quite like, but I think it's gone from being too expensive to priced about right now. There you are, 16p, 1.8 yield. Yeah, it's okay, but I think it probably should have fallen from those highs there where it was too high. But I think maybe not a bad trade to get involved with. Ondo Insurtech's fallen a lot. That was a crowded trade. A lot of guys jumped on that, including me. I paid 39p for them somewhere up here. Oh, that was a mistake, it seems. Anyway, that's fallen a lot. I'm not sure about that one. I don't know if it's a story or a good company in the making. I'm not sure. So these are all things that something's probably gone wrong. Futura Medical's pile of junk, absolute junk. Product doesn't work. Victoria, again, massively overgeared. Equities are worth nothing in my view. So huge rally in the first part of the year, but look, it's giving it back. Usually happens when companies are shot to bits financially. Victorian Plumbing, very savage fall yesterday. Look, 25%. We covered that in yesterday's report. If it continues dropping, I might pick up a few of those, but not yet. So these are your big fallers, which I think generally there's a reason they've fallen. It's actually when you're getting down to hit the ones that have only fallen a little, or you start to see one or two that jump out at me as being potential bargains. None of these do. I'm just doing with the Celebris Technologies. Have a look at that. I think that's an interesting company. CLBS. I don't hold. The PE's come down to a modest level. It's got lovely asset backing and cash pile. Never quite seems to deliver though, but it's a nice company. So put that on your watch list. CLBS. Other things, M&S, cyber attacks have hit the price, but they said yesterday they got insurance, so that might be worth a look. Although the metrics are not that exciting, PE of 12, quite a bit of asset backing, might be worth a look for a bounce. Colfax we like, under the radar, very illiquid. PE of 10, nice asset backing. So, but very, very illiquid. So only one to dabble in. Frontier Developments, I can't remember anything about that, but I think we quite like that one. NWF we quite like. So have a look at that. Just put these on a list and do some proper research on them. 10 Technologies we're a bit skeptical about. Ocado we're very skeptical about. Robert Walters might be worth a look, but I'm really struggling with why these recruiters are now. This one's a quality company. It's now loss making. Something's not right with the recruitment sector. So Peel Hunt, I think, put that on your list. That's worth a look. Sorry about that. Dialight, I don't rate. Beeks, I think, should have a bounce. That one, because they've got two big contracts in the offing. CLS, there might be something going wrong there. That's one of mine. Beeks and CLS I hold. Character Group is interesting. Have a look at that one. I've run out of time. I'm going to have to stop. This is the trouble when you ramble. Spectra, definitely have a look at that. I think that hasn't budged despite the massive market rally. I think that's oversold. I own that one. Trainline, I've recently bought. I was going to sell it yesterday, but then when it went up 5%. So I'm sitting on that one. M&C Saatchi we think is quite good. Videndum's crap. I wouldn't touch that. Marks Electrical, very disappointing. I wouldn't touch that. One Spatial Possible, possible, although the recent results were not great, but add that to your list. Epwin we like, add that to your list. Spectra, there's two classes of share, that was it. SPSY is the main one, the other one's irrelevant. Churchill China, I hold that one, that's cheap, that's worth a look. Mincon we think is cheap, I don't hold that, but it's below net asset value, 0.8 times recent results. LBG Media I think's cheap, don't hold that one. So anyway, you can go through the list here and see which ones you might like. Wilmington's quite nice. So that's how I'm going about it, looking for laggards at the moment. Anyway, I've run out of time. Got to stop. Hope that was useful. Bye for now. Bye.